As of October 2024, the US natural gas market shows relatively stable prices heading into the fall. The shoulder season, when demand for heating and cooling is lower, is keeping consumption down while production remains flat. However, prices are forecasted to rise modestly in 2025 as US liquefied natural gas exports increase, fueled by growing global demand, particularly in Asia, where economies like China and India are seeing strong industrial gas consumption. Despite this growth, the overall market outlook remains fragile due to geopolitical tensions and underperforming LNG supply. Welcome back to the Natural Gas Update. Here we've got the monthly, the weekly and the daily trends, and we look at the CCI 150. And on the monthly, you can see there it's broken above the CCI moving averages, as well as the price is also broken above its moving averages. So slight bullish movement on the monthly chart. On the weekly, likewise, it's bullish on both the CCI and the price chart. And on the daily, it's been bullish now for almost a complete, or over almost of September. But it's hit this resistance up here. So if we zoom into that, there's a minor resistance there at 30.96. It's currently resting at that point. But notice this major resistance at 31.94. But we're still showing bullish movement on the CCI. Now, if we go to the micro charts, we've got here the daily as a reference. We only take long trades. And what I've got here, and I've put in some arrows indicating bullish trades only, no short trades. And again, we only trade on a lower time frame in the direction of the higher time frame trend. So you can see here, each of those blue arrows indicate entries and potential exits, and some of these might have been break-evens or small stop losses. And more recently, we've got this entry up here, and that's currently hitting this, the current price hitting this resistance, so that's about a break-even at the moment. And if you would have had a few little wins in there as well. Now just notice as well, we did have a bearish divergence back here, lower highs versus higher highs on the price. That was on our last video. Actually hit our target range, which is the 23-38% Fibonacci level. And just for those, just to reiterate, we take it back to that point there, and that was where that 23-38% level was. Now, what we do have at the moment is also another bearish divergence. This is, you can see there, lower highs on the CCI versus higher highs on the price. So we might see a bit of a retrace to the downside. And if I was to draw a Fibonacci retracement on that one, I'd go from that low to that current high. That's assuming it pulls back from where it is at the moment. Could go higher, of course. And our next target range would be that 23-38% level Fibonacci if it falls from there. Of course, it could go higher. And for that to happen, we need to see it break through this resistance. And ultimately, we'd like to see it break through that bigger resistance to be more bullish. By that stage, we should see the CCI starting to break higher as well. So as long as the CCI keeps remaining with lower highs, we're going to assume that we're going to have a pullback at some point. BOIL, likewise on the monthly, we're still in a bearish momentum. There's no CCI for it. On the weekly, we do have this bullish divergence versus lower lows on the price, and that's making some move to the upside very slightly. But that's still persistently still a bearish outlook so far on the price chart at least, but just be mindful of that bullish divergence. On the daily, it's already broken up on the CCI and also the price, so only long trades to be taken on the intraday. Now it's broken through this minor resistance at 11.03, and our major resistance up here at 24.69 has a way to go. And if we zoom into that price there, you'll see the Fibonacci retracement so far. Go take to that high. It's currently resting around the 23% level. Now, there was no divergence really. The CCI is moving in line with the price basically. So I've got a double bottom there and a double bottom on the price as well. And the CCI started to rise and so did the price. So again, the CCI is moving in line with the price, which is what we normally see. But the price has retraced back to the 23% level. And we need to see it break much higher and beyond the 61% to be more bullish longer term. Now, if we go to the micro level, and we're using the daily here as a reference, taking only long trades based on the CCI and the price movement. We only take long trades on the 1 hour, and if you're trading the 1 hour or the 2 hour or the 15 minute, it's all the same sort of principles. And again, I've got the arrows in here for long trades. You can see here, you would have taken some long trades here, and that would have been a nice little trade to take. You can exit it in a couple of ways. You can exit when the CCI breaks into the moving averages, or when the price breaks into the EMA 9 or into the moving average range. So they all have their own pros and cons. I prefer to let it run and stop it out when it breaks into that CCI range that you would have got out near the high there of that little trade, for example. Now you're currently still in a trade. You would have been a long entry there. But again, the daily showing bullish movement is no sign yet of a another resistance on the daily, so we might have a bit more movement to the upside here. But just do notice we do have a bearish divergence, lower highs on the CCI versus the same period, higher highs on the price. So at some point we're going to see a pullback. So again, just very carefully monitor that if you're watching it and on the hourly basis, and close it out as soon as you see some move to the downside, especially in this moving average range of the price chart. So for KOLD, that's broken above the moving average on the monthly. There is no CCI for it on the monthly. On the weekly, it's broken below the moving average range, showing us a bearish signal. But notice we did have a bullish divergence here in the early days versus lower lows on the price, and it's bounced from there. But notice the CCI is currently neutral. It's in that moving average range, and the price is broken low. So we might see further downside in the coming days and weeks. On the daily, it's already hit that resistance at 85.10 and bounced down from there, broken through this minor support at 61.65, and further downside to go on the daily chart. So only short trades to be taken on the intraday. And if we go to the 1 hour chart, again, short trades only. I've got the bearish arrows here, and that would have been a nice trade to take. Again, closing it out a couple of spots. I would have closed it out here when it broke into that moving average range of the CCI. That would have been near the bottom of that range, and enter again short when it broke down from that. Actually, no, you would have probably entered that entry there, and you would have been wise to be careful because we've got a bullish divergence versus higher lows on the CCI versus lower lows on the price. Now, you still could have entered a short entry there on that candle, but again, just be careful of this bullish movement. So we might see a pullback to the upside. So if you're in this trade at the moment, again, carefully watch it, and as soon as it hits this moving average range of the price chart, exit your trade. Lastly, for UNG, it's bearish on the price chart on the monthly, and also on the monthly, it's actually neutral. It's in that moving average range ever so. It's hard to see, but it's actually, with that background, I've got the grey, the red, or the green, and that grey indicates it's a neutral positioning. So neutral on the CCI, and the price is very bearish at the moment. On the weekly, it's bullish divergence, and the current CCI is bullish. And we see there it's actually broken above the moving average range of the price chart. But notice it's actually still falling longer term. So we might see it fall back down again. So we'd like to see it break these previous highs to be more bullish on the weekly. On the daily, it's already broken above on the CCI moving averages, and likewise above on the daily price moving averages as well. So bullish movement only. So taking long trades only. Going to the 1 hour chart, we put in our long entry signals. So again, only taking long trades based on the daily on the 1 hour chart. And again, you would have been currently, that would have been your last entry at that point. But again, notice similar to the other charts, we've got a bearish divergence, lower highs versus higher highs on the price. So we might see the price pull back at any stage. Of course, this can keep going higher. The CCI on the daily is showing no sign of a pullback yet, so that's a good sign. But again, I'd always pay attention to these divergences to get ready to exit whenever we see a pullback towards these moving averages on the price chart especially. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.